When I have been counseling home sellers for selling their home, I was shocked. They did not know the tax consequences. A lot of them thought, oh, you can take the money from the sale of this home and go buy the next one with no tax consequences. Or some others did not know that there is a state capital gains tax here in California. Some others did not even think that their capital gains are taxed. So, this video is dedicated to all those who do not understand the consequences of capital gains tax that they owe once they are ready to sell their home. We are going to talk about it today. So, here is the case. One of the clients that wanted to sell their home, I went and met them. And they said, oh, what I'm going to do is sell this property, take all the money that comes out of it, and buy my next property with all the money coming out of it. And I said, your capital gains is? And he says, $1 million. And I can buy the next property that I want to buy full cash because that property is $1 million and here I'm going to net $1 million. And I said, how are you going to net $1 million? And he said, well, I have a mortgage of $500,000. I think my property will sell for about $1.5 million. There is a clear $1 million in between. I'll take that and buy my next property. And I said, no, that's not how it works. So remember, whenever you hold any asset, be it stocks, bonds, real estate, or any other investment for that matter, what happens is that you have to pay a long-term capital gains tax. And it is long-term or short-term. So if you were to hold the asset only for a year, or go talk to your tax consultant, within a short-term period limit for that particular asset class, you will be paying the short-term gain. And if you sell the property over a long period of time, then depending on the asset class, you will be paying a long-term capital gains. This is not for us as realtors, for us to advise you as to what you should be doing. This is completely something that a tax consultant should be advising you. So all I am trying to do here is explain the concepts so that if you are in a place to decide whether you want to sell a property, buy the next one, invest money into the next one, you should be prepared with your questions to go to your tax consultant. And that's what I'm doing here. So let's take that case where they bought the property for $600. They now have a mortgage of $500 after increasing, decreasing and whatnot. And they sell it for $1.5. So their gain is, for example, $900,000. So the current tax laws, and again, it will be up to you to go check with your tax consultant and get all these things right. I'm giving you pointers to ask questions to your tax consultant. So, if you are single, you can keep a capital gains tax exclusion of $250,000. If you are married filing joint, you can keep $500,000 as exclusion. So if you made the $900K in gain, $600 was the purchase price, $1.5 was the sales price, you can take $500,000 if you are married out of it, keep it directly in your pocket, you don't owe any taxes based on that, and the rest of the $400,000 is going to be subject to capital gains tax. And that's what we are going to discussing here. A lot of people are just not aware that there is a capital gains tax impact. And not just that, remember also that capital gains here in California are two types. One is the federal, which is what goes to the IRS. The second is the state, which goes to California. Good news is, the federal tax, you can have a short-term and a long-term gain. California, you are going to just pay based on your income. They do not consider any income as a capital gains, and so they don't treat your capital gains income any separately as compared to the earned income, which is what you get taxed on directly from, say, your salaries, your income, your stock options, bonuses and all. It gets taxed the same way, not the federal. And so just remember to work with your tax consultant to get these calculations identified much better. So that's that. So in this particular case, they are going to pay a state and a federal capital gains tax based on 400K of income. So say the federal tax is 20% long term based on their income, and the state tax is 9% or 9.3. What they're totally going to owe is 29.3, which is roughly 30%. So 400,000 times 30%, they are going to pay $120,000 in taxes. Guess what? Just like a lot of home buyers, they sell their stock options and then come April, they have to pay taxes on the stock options that they sold. I have had cases of that, and then they get hit by that tax bill, which is a surprise. So what we are trying to do here is plan so that you don't have a surprise. And a very good team of a real estate agent who is aware of these things and will point you to the right direction. Your tax consultant who can do the math for you and do the exact calculations so that you can plan accordingly. And number 3, your financial advisor who can tell you how to plan, how to space out sale or purchase of these properties, and then work accordingly. But now, let's get back to the $1.5 million sale price. There is a little bit of good news though. Suppose you spent $100,000 fixing the property or upgrading. Say you did the kitchen, you did the bathrooms, and you did the new roof and everything. Say $100,000 during the life of your stay in the home. And after that, so what happens is, suppose you bought this property for $600,000 and you paid $100,000 for these expenses. Your cost basis goes up from $600,000 to $700,000. Also, on a other note and a good note is, say you sold the property for 1.5 and there is commissions, selling costs, county transfer taxes and all those get subtracted from the 1.5. So suppose these costs were $50,000. What will happen is your net sales price that you realized is 1.45, and 1.45 minus 700, that's what you're going to pay your taxes on. So 1.45 minus 700 is 750. Out of this, if you're married filing jointly, you take 500 off. So you're only paying your taxes on $250,000. I will include this sample spreadsheet in this video in a link below and you can download it. But that is how this thing works. There are a lot of other ways that you can work these taxes. If you want more information, more options, work with an agent like me, a tax consultant, and your financial planner to get a fuller picture and a better planning when you're selling your home. Like this, please subscribe. And if you think this was helpful, share it with your friends. We thank you from the bottom of my heart for watching this video. See you on my next one. Bye.